As an NRI living anywhere around the world, one of the biggest decisions that you'll have to make in your lifetime is understanding where you should invest. Should I continue to stay invested in India, or should I look for an alternative solution in the place where I currently reside? A wrong decision could mean thousands of pounds lost in taxes and return. And here's what I would do if I was starting my financial journey living abroad from scratch. Most NRI continue to stay invested in India out of familiarity. They know the currency, we know the market, we know the stocks and companies, and we continue to stay invested by sending our strong currency into a market and investing over there. And due to the familiarity, we've seen our returns in the past and we feel that this is exactly what we are going to get. But here's the problem. Your investment decisions should not be based on emotions. It should be based on tax efficiency, currency exposure, and long-term growth. And it all boils down to one single question. Am I going to be spending all my life in a country that is not India? Or am I actually going to spend my time somewhere else? If you get this answer clear, then you get a clear path in terms of where you should be going. As an investor in India's growth, I've always been drawn towards the higher economic growth. I have looked at the equity market, how it has performed, and I've been invested in India's growth since the time when the Nifty was somewhere close to about 3,500 points. And I've seen the visual growth of India. And when you look at all of these things, you see the true potential of how your investment is going to look like if you stay invested in that single market. But what I didn't factor, or what most of the NRIs don't factor, is when you invest in India as an NRI into a single market, you're concentrating all your investment into one single market's growth. You're putting your high value currency such as dollars, pounds into India's rupee. So basically you're converting your strong currency into a weaker currency and investing in a single market. And when it comes to the returns, this is really strong as well. But what we don't understand is when it comes to withdrawing these investments, you're hit with taxes. You are then looking at currency depreciation, which is roughly close to 3.5% to 5% year on year. And you just have to look at how the currency has been going down, or the pound or dollar has going up against rupee. That should give you a clear indication in terms of how your investments are going to look like when the time comes for you to withdraw or sell your asset. And there is complex taxation. And recently there's been so many changes, it's hard to keep up. Out here in the UK, the tax system works completely different for foreign funds. And this can reduce your overall return when the time comes for you to bring that funds back into the UK. What is the solution, you might ask? I'm going to give you an example of what is available here in the UK, and it is possibly available across the world as well. Out here in the UK, we have something called as Stocks and Shares ISA account. This account allows you to invest or set aside up to £20,000. This can be used to invest into ETFs, stocks, and shares. The absolute advantage of this account is any capital gains that you make out of this account and any dividends that you receive in this account is completely tax-free. You don't pay a penny to the government. And many investors use this specific account to invest across the globe. The simple way you can start as an NRI is to look at Vanguard FTSE All-World ETF. This alone gives you exposure to nearly 3,700 odd companies across the globe. This ETF is spread across US, Europe, emerging market, and Asia as well. So that way, your investment is spread across different regions, different currencies, and the best part is any returns that you make from this is completely tax-free because of the account that you have used to invest. When I started off investing back in the day, my clear objective was to invest in India's growth, see the returns, take the returns, and then spend it back in India itself. But then my priorities shifted, my circumstances changed, and suddenly I'm seeing myself settling down here in the UK. At that point in time, my investment in India did not make any sense to me. But this could be different for different people. And I'm absolutely certain that there are other individuals who are thinking about moving back to India. For them, it makes absolute sense to stay invested in India because all the returns that you're going to get is still going to be spent in India. But here's what you can also consider. Staying invested through stocks and shares ISA, which has a tax efficiency built around this, means whatever the returns that you're going to get is going to be substantially better than what you're going to get back home. So don't abandon this option that is available over here and send all your money converting your strong currency into rupee. And I'm also not suggesting to abandon India completely as well. And here's the strategy that I would adapt myself. Currently, my strategy is to invest here in the local market because I'm going to be seeing myself spending more time here in the UK during my retirement. Plus, the option that is available here in the UK gives me tax-free returns. So anything that I make out here, no tax is paid to the government. So whatever I'm going to get back from this is an absolute return. But at the same time, I do have investments in India, which will continue to be invested. Here's what I'm doing personally. My 100% of investment is split into two. 80% stays here in the UK and 20% goes to India. And that 20% is spread between large cap and mid cap. The 80% is invested in one single fund, and that is FTSE All-World ETF. This specific one alone gives me the maximum diversification that you can get from any investment. So as an NRI living abroad, the goal isn't whether it is India versus whatever country that you're living in. It's about global diversification of your investment. If you diversify your investment, you are protecting yourself from all the turmoils or single market risk. And plus, when you are investing through a tax efficiency account, you're getting all your returns without paying a penny to the government. And if you're an NRI living here in the UK and would like to know a step-by-step process of investing here in the UK, then comment invest below and I'll make a separate video for you. Thank you for watching and I'll see you in the next one.